Good evening. I'm going to take a review obviously this is some of the hard-earned money. First, oil and gas. Second, energy. Third, financial services, meaning the banks, the insurance, and the investment companies and whatnot. And infrastructure, telecoms, tourism, and transport. Okay. Again, as we all know, this show is divided into two parts. The good, and that's what's up. The bad, which is the ugly. Again, these are the stocks you want to get out of it ASAP, as soon as possible, okay? First, let's see some of the index, okay? And I want you to see just two price points. Back in July 2006, okay, the whole month index of the NSE, which is the Nigerian Stock Exchange, sits right there, 258.5. My fellow viewers, right now it's sitting strong in 517. Okay, what are some of the stocks that you want to get into right now? First Bank, that is very hot. Okay, First Bank is coming out at 33 naira. Okay, and the market is selling for 40 naira. Right now it's in technical suspension. I'm putting a projection out there that First Bank will reach the 40s, definitely the 48s, maybe the 50s. What does that mean to you? 33.50, 33.50. Do the calculation. Put your money in there. Get out when it's 50. You find another time to get in the game. Good money, good stuff for you. Okay. Dangote Sugar. Why Dangote Sugar? Dangote Group 18% divestment from NASCOM PLC triggers swift repositioning as investors hope to achieve quick parallel wins. This led to sizable price correction as the bears restricted further price on bid while still presenting favorable entry point. Entry point for what? Dangote Sugar. We all heard about the story of Dangote. I told some of my friends to buy it, but they were very happy and they're extremely happy for the money they've made right now. Some did not. Well, that's another story. Bottom line is Dangote came out 17 naira. 17 naira, Dangote went to 56. This is within 3 months. Okay, Dangote came out into the market around early April, right? Went to 56. Now it's around 40. It's still a very good time to buy because my near-term 6 months projection for Dangote is that Dangote will probably go at least 60 naira. That's 50% of your money. Take advantage of it, buy Dangote, and you'll be glad. Next, African Petroleum. Why African Petroleum? The fundamentals of this company has improved management, stability, and efficiency. Projected earnings per share ratio, or rather the projected earnings per share of this coming quarter is averagely 4 naira 83 kobo. So the price point right now of AP, I think it's a good buy. Next though, this is a company that I think anybody that has any affiliation to Nigeria, has been to Nigeria, knows this brand. They've come a long way. And brand recognition definitely drive investors' actions. So Ohando is a brand that I like. It's a good stock, and why? First quarter results show that 14% increase in turnover was achieved, while net profits surged by 69%. Recent profit projected at EPS about 6 naira 30 kobo. That's good considering the price point of Ohando right now, and I think this particular time presents a really good time to enter the stock Ohando. Buy it, it will make you happy. Next, Mutual Benefit. This is one of my favorites right now just because I like this brand. It's a company that I like the way they've repositioned themselves in the insurance sector. So it's a good buy. Right about now is about 4 naira something. It's gone to 5 naira 50 kobo. When I was picking and tipping the stock was around 3 naira. Well, now it's gone to 5 naira 50 kobo. Now it's back to 4 naira something. Still good time to buy. That stock is going 6 months or more projection at least it will get to 6 naira or more. So bottom line, good stock to own. Long term potential is tremendous. Last but not the least, Continental Reassurance. This stock is very hot. As a matter of fact, there's way more demand than supply. There's a lot of demand, there's a lot of want for this stock right now, but many people, considering it's a new IPO, many people haven't even got the share certificate, to even not to talk about putting the stock out there to sell. The last time I checked with my stock brokerage facility, the numbers I got was in a daily, and this was yesterday, the daily demand was 55 million shares on filled. So that means the stock that actually got normalized on the stock exchange was 55 million shares short. Okay, this stock came out 1 naira something. It's now riding close to 3 naira. Still a good price entry point. We do know the stock will eat 5 naira or more. So if you have a chance to get into this stock, very hot stuff, get into it. You'll make you some good money. Let's now get to the last part of the show, the bad and the ugly. Okay, this is a stock you need to get out of right now. Cadbury, talked about this from the last show. Cadbury stock, they overstated their price, their earnings and their revenues just to impress the investors, and obviously that backfired. They got cut and now they're printing the price. And what does that mean to you? Stay away from that stock, at least for now. Second, UBA. Okay, UBA just released an IPO. They just released the technical suspension. They've had a very good price appreciation. Okay, people are taking profit on the short term. Not to say long term this might be a stock to hold on to, but on the short term, sell that stock, take your profit, reposition yourself. Third one, Guinness. Why Guinness? This is a brand that has been very strong in people's mind. Long term, I think this is a good stock. But for now, on short horizon, the increase in recharge cards purchases per naira of income could reduce consumers' flair for brewed drinks. What does that mean to you? This is how and why. Okay, now we have telecommunications. We do know that even on Okada man have a phone and they buy recharge cards. What does that mean to their pocket? The disposable income hasn't changed. What changes the pattern of buying and the kind of things they prioritize themselves in buying. So what that means is, instead of an Okada man buying two Guinness stout at the end of the week to compensate himself, what he does is buy a recharge card to call his fellow people or call his uncle in America or in London, just to show that, you know what, I've arrived, I have the capability to call. So people's buying preference have changed a little bit. So it's really a competition between the telecoms and the drinks. And I think the value had is almost, I mean, it's a no-brainer. So people choose to buy a recharge card, and that's affecting the brewed drinks right now. So for now, I stay away from Guinness. Not to say, like I said, it's a good stock to own long term, but in the short horizon, get out of it and cut your losses. Well, thanks for listening and thanks for watching. This is the end of the show. I'll see you next time.